Well, if a pedestal of original thinkers is ever to be made, there is one name which will find on you will always find it on the pedestal, and that is Manish Chokhani. Over the years I've interacted with him. It's just been a pleasure to understand the ability of Manish Chokhani to connect the big picture and with his understanding of valuations and what it means for your portfolio. So on a birthday, well, while all of us are getting older, look at Manish Chokhani.
Getting even older.
Yeah. You are looking younger and younger.
He's just back from a nice US holiday, right?
Holiday.
Recharged.
Actually, Canada.
Even better.
So even better, mountains and
Atiti
lakes and everything.
India is where everything is happening. You go outside India. What is this?
No, but it was a chance to go and meet people and see what's going on over there. So from
what
that
is
perspective,
going on
it was
there?
fantastic.
Because India is really the buzzing place. You know, I mean, we were chatting with Atul Suri and he said, you know what, the world market's at a 52-week high.
Right.
We're the only ones at a life high.
Yeah, that's right.
So
and
what
even
is
that
the world saying about
And even
us?
that 52-week high in the US, when you go around and see the decay in my favorite places in the West Coast and even in fact on the East Coast, it's what I call a phase 5 in Suri language, where it's narrow leadership, the 7-8 stocks or whatever, Fang Mant or whatever you call it now, are holding the market. The 490 are actually not doing so well. But it is a life cycle of countries, and clearly, as Larry Summers very famously said, that Japan's a nursing home, Europe's a hospital, China's a jail. So it is that sort of a world, and events couldn't have come together better for India to finally have the tailwinds, which, you know, always the bear case for India we used to make was always the macro, and the bull case was always the micro. Bottom-up stories. But this time it seems to be a confluence of things coming in favor of the country.
So is India the baby or is India the teenager or adolescent?
India, I think, long runway ahead.
Yeah.
Events and also actions that have been taken in India over the last decade or so are all coming together. If you think of it, if COVID had hit and then the Ukraine war had hit, and we spoke also during that period, it was just so uncanny what blessings we got. So in a very odd way, you get oil at a very cheap price. Otherwise, with the oil shock, you know, God knows where the economy would have gone. So it starts from there. Also, during that period, India had made all these supply-side reforms. So from a very extractive type of economy where you went after 5 million people and extracted more and more out of them, this government has certainly gone after supply side to increase velocity. So whether you're building infrastructure with road, rail, port, all of that, or you're doing GST to enable, you know, movement of goods faster, or the Jam Trinity to, you know, put money into poor people's hands, giving them their LPGs, electricity connections, water, literally that Bijli Sadak Pani which they never had for years, bringing them to mainstream. And then along with what happened on our broadband telecom side and the financial side with the India stack, it is just staggering to see everything coming together. And sometimes you say you make your luck and wait for the right time. I think India has made its luck and the time is here.
Manish Chokhani uses this very famous line, which is that markets always vote for rate of change. The rate of change is getting from good to excellent.
Absolutely.
And that's what markets are voting for. But when you are investing, it's also about understanding the prices at which you invest. The fact that we're at an all-time high, the market cap is at an all-time high, with the 5th largest market in the world. How much of this temperament of good becoming excellent is something
in the price? So very, very fair question. And again, when you look at people outside, they're very enamored by the Indian consumer. So you will find all the consumption stocks, the discretionary stocks are all pricing in 10 years of growth. I think the pricing is wrong there. The thesis is correct. Eventually we'll have a J curve. But before we get there, we need to lift that per capita income up, which we are stuck at whatever, $2,500 or whatever number. But before that is to happen, a lot of the jobs in manufacturing, the jobs in infrastructure, the build out of India has to occur. So if you were to kind of phase it, the next couple of years is really the period of infrastructure, capital goods and defense, railways. All these companies are really going to benefit a lot. And I don't yet think the prices have captured that fully. As you continue, again, our old theme, the financials are at the center of everything. So while the last few years they've all gone after the retail guys, I think this whole corporate banking, the PSU banking pack, if you take the top 3 or 4 banks after SBI, they're all in 30,000 crore type PPOPs, looking evident, which are large numbers. SBI will be north of maybe 1,25,000 crores. I don't know. I think you just interviewed the chairman. The numbers are going to be staggering coming here. HDFC itself will be probably close to a 1 lakh crore PPOP. So the numbers that will start coming out are going to startle people and shock them. And therefore, things which have kind of underperformed, think, oh, everyone owns banks and financials are over-owned, overexposed. I think over the next 4-5 years, the leadership of this market will be very, very strongly with this entire group.
So if I say that banks is a consensus buy in terms of a view,
sure,
but it has not reached consensus pricing, will I be correct?
I think, see, look at it this way. Everyone knew 10 years ago that Amazon, Apple, Microsoft are spectacular, and yet the biggest wealth creation came there because the percentage churn
Great point.
on large numbers, the delta that you make on the wealth is, sometimes you miss the point on just looking for percentage gains, but on a large position, if it then multiplies from there, the absolute impact on your portfolio is very, very large. So today, it's become very popular that, oh, you must keep churning and moving, or it's a technical trade that HDFC Bank will see selling pressure and so on, let me get out, or PSU banks are now done and so on. All
he
these
tracks it all,
all these favorite PSUs
even on holiday he was working
around 4-5 multiples on current earnings, and you haven't yet seen the acceleration which is happening here. If we all believe that we will get to 5 trillion and we continue with this 20% type saving rate, it's $1 trillion of saving, and we are financializing the economy. And we've got RERA in, where now you can actually build the whole mortgage business out as well. So you don't need to put hard cash down for everything. Just imagine the staggering numbers that start coming out over here. And really, for the growth of the country, you need, construction, real estate, infrastructure spends, because they create jobs, they consume steel and cement. And that starts lifting then for the workers the per capita income, which allows them to go buy eventually then the cars and the ACs and the fridges. So I think that cycle has started. We're in good shape.
That's what we were discussing outside the studio as to how the market has become narrow. Your reliances, right. HDFC Twins, TCS, Infi are not performing. Right. It's actually your defense, railway stocks, infrastructure. That's the hot spot, right?
So it's the nature of our market for long that 30 companies are 50% of market cap, and it's been that way for long, and it has to broad base. You won't get to $10 trillion market cap with the same 30 companies, and it will churn. But having said that, it's these 5 sectors, if you think of it, energy, globally. So whether it's Reliance, ONGC, Coal India, NTPC, utilities, I mean, the profit number is there. The market caps may not be necessarily all there. IT, banking, metals, utilities. These are the 5 which are 75% of India's profit number. The next set is really where the interesting stuff is, which you mentioned, infrastructure, capital goods, FMCG, pharmaceuticals. Those now need to start coming and playing, a larger role. But see, in a bull market which has a long, long way to go, it will rotate. You can't have the same set of companies or sectors running every month. So there will be periods where they kind of take a pause, and then you'll get all your technicians coming and saying, look, it's consolidated for 1 year or 2 years and therefore it'll break out. Eventually the IRR catches up to the ROE of the business. So I think that stage is being set very well. So this market, if you step back, this is not going down. I don't think anyone can make a case to say this market's crashing and it's overpriced and ahead of itself. So at best, you'll see the index consolidating, which is what we think as well. But the underlying breadth of the market is so strong because the profits are now spreading across the economy. And that's what then starts lifting the market to higher and higher steps as we go along. So honestly, in my 30 years, this is the first time where you feel every sector can participate at different points in the cycle.
But is this the new India, the underlying broader markets that you're talking about, defense, rails, manufacturing, infra?
Yeah. I think it is because the government's also got its act together for the first time. And we are probably a 1 week premature to say what comes out of the US. Now, just as an example, and I don't own the company, though I think highly of it, if you come back with a tech tie-up for aircraft engines and it goes to HAL, then it can't be a 20p stock. You may say it's a PSU, but then you've got 5-7 years of runway ahead of you when earning compound, and then terminal value views change very quickly and stuff like that.
There is this old school view that avoid PSUs. Capital allocation is pure.
Last 2 years we made out like bandits on PSUs. So
you can still make money in PSUs.
I think you can still make money. So I don't make the case that these will trade at 30-40 multiples. But the fact is the government. Okay, let me step back even from there. I say when you looked at the budget of the government every year, you said what the hell are they spending these subsidies on, because nothing's reaching the end consumer. Now with that same amount, if you're able to get that money reaching the end beneficiary through your JAM Trinity, the quality of expenditure has gone up. So the efficiency in a sense of the government has gone up. When you see our tax returns, given the way things used to be run in the past, and you see the rate of change today with faceless assessment and getting your refunds quickly, there is efficiency all around. And that same thing has applied to PSU. So maybe the same set of officers is now looking at things and saying, I'm going to be measured and I'm answerable. The same PSU banks which we hated 4 years ago are delivering these staggering numbers. It's the same people. It's just the attitude, mindset has changed. And it's not like every PSU is bad or every MNC is great. There are good managers and there are bad managers everywhere. PSUs happen to occupy what we call oligopoly type businesses. So the characteristics were always there. It's just maybe the intent or the energy was missing. With the outlays which have now happened, like you saw the railways outlays doubled. Roads are going absolutely crazy. Probably the only place we'll catch up with China earlier than 15 years will be roads. Railways, port, like it's happening all across the board. So if someone feels I'm being measured and someone's looking out at what I'm performing and therefore the rewards will follow, there are PSUs which are doing well and some which are going to do even better from here.
What is your understanding of this AI cycle and what means for Indian IT sector?
So AI is, my son puts it well, that we are becoming more and more superhuman. So AI is the final frontier because say with robotics and sensors, you are replicating your arms and limbs. With material science, you are replicating what is happening to your skin and so on. With energy and storage, you are replicating what your heart is doing.
Iron Man, right?
With AI, it's the
with
mind.
computing power. Computing power, and then the bandwidth is really your nervous system going up and down. So with computing power, how fast your brain can process. But now with AI, you multiply that manifold. And if Elon Musk is right and we put Neuralink into our spinal cords, you are one of the Avengers then. So you do become superhuman with that. And like with most things, you can argue it can be the end of humanity, but electricity could electrocute you and kill you. In theory, the nuclear, fission should have destroyed you years ago. By the way, there's nuclear fusion now coming.
Yes, I've heard about it.
So if you put those together, you basically create your own sun. So energy will be free. So, I mean, as an aside, imagine what that does to India. When you get that sort of energy cost decline with the way solar costs have gone, storage costs have gone, what's going to happen with the hydrogen economy. It is staggering that the rate of change over there is fantastic.
And also sorry, go ahead.
Sorry, just to complete your AI point. So if like the Indian IT services, I think the fear is that all these coders will be jobless. But with AI, the way it's going right now, you don't know what they are doing behind the scenes. So you'll need an auditor in a way to check what they've done. Secondly, the bottom end coders you may not need, but at the same time, if I can basically improve productivity of my programming, it allows me to go deeper into the market, right? So now instead of saying I only want to do Fortune 500, they can pretty much go into all the MSME also of the world with, literally short form program, because these are generative. And you can, on the foundation, you can build specific use cases and build up from there.
Have you been chat GPT?
It is transformation. It is, the way, when personal computers came out, or then when the internet came out, this is that moment. This is transformation.
Okay.
Also what's transformative is, like we were discussing, how the traditional Indian business houses are also transforming and evolving. And you coined this term, right? BATAJ,
I don't know how to put it.
I don't know how I'm supposed to say it.
It was just an easy way to remember.
The Birlas, Adanis, Tatas and Ambanis, the way they are also evolving.
And Jindal, So all of them are actually morphing from traditional businesses to new age businesses. And it's the old metaphor where in the US you grow tall like a sequoia tree and you go deep because the economy is very broad based, so you have to specialize in something. In markets like ours where management skill is really the missing link, you become the banyan tree and you spread across sectors, and then you can start going deeper there. And fortunately they're all going into non-conflicting domains in a way. And with the management skill they bring in, hopefully they allow a lift-off in the economy. So at one level it's these 5 or 6 big business houses, and at the bottom you have these 250, 300 unicorns. So the spirit of, I think, enterprise being unleashed in this country is staggering.
Aisha, every anniversary we speak about a corporate good. Last anniversary we spoke about Adani. I think on the 12th anniversary we spoke about Tatas.
Right.
So which is one corporate good we should speak about today? where you think there could be
Speak about
re-rating?
Jindal today, so because we
Can
haven't
that be the
covered them in
transformational group?
because all of them, what they've achieved is just staggering. And what
Well,
they're
separate
also
brothers.
poised
I
to
mean,
achieve.
they are not like Tatas.
One unit.
Jindal is
Yeah.
separate. So which one?
No, I mean, Sajjanji is obviously, the one we love the most. Not that we don't love the other, but it just, and the humility of the man is also, to get the ENY award in Monte Carlo.
But the fact that he's now looking at buying 40% stake in MG Motor, do you think they're trying to replicate an entire EV system?
So I think some of this is also India finally putting its foot down to say if you want to access our markets, you must have local wealth creation, which 15 years ago, you'll remember we used to cry ourselves hoarse on your shows when you were just starting out. And we're just opening the market and giving it away to people. So I think it's a bit of that, and this may be the beginning of that, because you can't block the entire country from saying you can't come into India, because at some level you want the tech. And for example, in EVs, they are the leaders in the world, and you would want them to come in. And if they're coming on terms that we want, it's probably a good thing. I would also just fail to, if we don't mention the Apple moment in India, is staggering for what has happened. And I think it's as transformational as when G came to India for software services. Okay. So Apple's come in and already they are on a run rate of $10 billion exports from India this year.
iPads are also coming soon. iPads would be made in India.
Their stated ambition is to go to 100 billion exports.
Such a great.
Now imagine what it does for the ecosystem. So when a Maruti came, you know what happened to the auto and ancillary industry. When G came, what happened to the whole software services industry. I think the next generation of kids coming out of college will not want to go to software, they will go to hardware. Because that's the combination of hardware and software together.
It's a great point, such a fabulous point.
Yeah.
Maruti comes, auto ecosystem gets created. By the way, we are highly competitive there.
Right.
Yeah.
ITG, thank you Jack Welch.
Right.
God bless you. You got a call center in India, ecosystem of IT got created. Apple's come to India.
And you see beneath the surface what's been happening to the EMS companies.
So is that the new theme now? Now next, like
It's been
Ramdev
the
ji
theme.
says.
I mean, we've all been buying it, participating in all of them. So 5, 6 of them, and they're still at the bottom end of the sort of value stack. But when the Tatas will put up their semiconductor stuff, and we start going deeper into that ecosystem, it's inevitable. Because whatever we are importing today, in 10 years we should be exporting that.
When we are already exporting, mobile phones.
Yeah.
My next question is about, so the large profit pool in India financials.
Yeah.
Second, I would imagine would be IT, and third would be energy.
Yeah. These are by and large the big chunks.
We've discussed IT, we've discussed banks. Now let's understand energy. That's where the transition is happening. Solar prices have come down from 15 to 3. I've been told from 3 could go to 2.
Yeah.
What is the best way to participate for an investor? Because energy is where the real change is happening.
It's when the internet came, you didn't have to buy internet stocks. You bought the guys who benefited from that cheap internet. So it's the same with energy, that India is the worst affected country in an energy crisis historically. And now when energy prices, well, it's not imminent, it won't be in 2-3 years, but say you're talking 2030, imagine what it does to your balance of payments. Because that 6% import bill hopefully vanishes if you're creating your solar and hydrogen locally. And maybe, like I said, from an importer, you become a net exporter of energy. Because solar, literally 1 hour is equal to all of mankind's needs. And the problem was on storage technologies. And even in storage, if you start creating this hydrogen thing, and today the cost curve is very high, but the stated goal of all the Reliances and others is to get it down to that $1 price point. It has transformational impact. So industry after industry, which you think is highly energy intensive and we can't participate over there. Just for example, and I'm not making the case, but let's say aluminium is considered to be highly energy intensive.
Yes.
Aluminium is the metal of the future because you want to make aircraft or lighter cars, a lot of your consumer products and so on with that. It changes the dynamic of the industry. You always had the bauxite over here. You always had the limestone over here. Now you have the cheap energy. Do you become the hub for the world? So industries will just transform. And therefore this confluence of technologies which are coming and hitting, it's just so fascinating to see how these can transform, and all you want is to be with the smart person who's running those businesses because they know how to surf the waves. Elsewhere in the world, if you went and you said there's Wells Fargo and JP Morgan, but they are ossified and the fintechs are coming and disrupting them, the good news is in India we onboard them. So the fintechs have been taken inside the banks over here. Same way, new energy has been taken inside the old energy company. And they are the ones leading the charge. So they're not getting disrupted in a way. They're sort of morphing and riding the wave. in a very different way. To give you the example, if you think of the old Kumar Mangalam Indian rayon business and how they transitioned from there to the new age businesses of fashion, the financial services, and so on. It's that sort of transition happening across these business houses and across the country. So really, really good space.
Absolutely. What could spoil the party for us?
Well, we usually hit our own self-goals. So the world will continue to have its mess and its schizophrenia, because this money printing, which they've unleashed, has created a wealth effect. So the central banks have lost power to actually cut inflation. And with what they're doing with trying to get rid of China in the supply chain, how Britain has got out of Europe, these are fundamental bottlenecks to trade. And whenever you stop trade and you put toll nakas in a way, you have inflation. So they are becoming like the old India, where there are blocks everywhere, and therefore these prices aren't going down. And you've created so much wealth effect for the generation, what I call the baby boomers and Generation X, which has 75% of the wealth. So it's a bit like interest rates going up, it's not going to affect my spending, because I'm now consuming out of wealth, not out of income. That's the case in the West. So whatever these central banks do, they're not going to be able to curb inflation. So rates are going to remain higher for longer. We have to wake up and realize we are buying these stupid notes which they print every week. Should not be part of our reserves. If we're going to be third largest economy in the world, we need to be part of a currency which people are happy to hold and value. And we need to stop this obsession of 1991 that we need $500 and $600 billion of reserves. You can't have 15% of your country's money blocked in an unproductive, depreciating asset. And I don't even call it an asset. It's like a Bitcoin actually, to be holding a dollar or a euro or a yen. So some goal, self-goal like that, or obviously with politics here, you don't know, we have election coming next year. Everyone thinks it's kind of a slam dunk, but who knows. And then you go back from supply side to chaos. Confidence changes. And look at the case what's happened in China, right? So they had everything going for them. This war actually played to their advantage, because now they had Russia in their pocket and the whole world is trapped because they can't get goods for the next 4 years if China stops supplying. But they've gone and created self-goal by putting uncertainty by what they did with all the entrepreneurs there. This common prosperity, then how they've clamped down on dissent. So the uncertainty that they put in mind of entrepreneurs and consumers has actually whacked that economy. And this overstimulation of the economy with infrastructure and real estate spend has resulted in a banking crisis. And the shadow banks are in big mess over there. So China being like X growth is a problem for the world. And that starts causing pressure, because now they'll be dumping stuff for chemicals or metals and so on at stupid prices, which if we take advantage of and lower our cost of production, do we become competitive? So it's all like a story which you see, and you see how it unfolds and you react accordingly.
So I'll take the clock back to financials again. And the first port of call is you buy large banks. They have the right to win, and they have advantage in terms of having a real CASA dominated franchise. But minus banks, AMC stocks are not doing well. Insurance stocks are not doing well. And fintech are just about getting their definition right, that they want to be loss growth dominated or they want to focus on profits. Apart from buying large corporate banks, what are the other plays in financials?
It's banks depends on where you are playing in the cycle, right? It's like when you were playing IT, it's not that you only bought Infosys, TCS. You could go down, you could buy the Mindtrees, or you could go down and buy the L&Ts and the Persistents and so on. So similarly with banks, the space is so large that, I mean, again, there are a couple of mid-cap banks that we bought, which obviously the rate of change is much faster, and you make a lot more percentage gain there. But when you want to just keep money, how do I say, stacked, that you're happy to compound 15%, you don't care what happens, maybe 2-3 years, then it catches up 50%. It's good enough for some. So depending, what stage of your life cycle you are and how you want to play, there's just no dearth of opportunity. And while we may think of 3, 4, 5 large themes, and within that you're, putting things in the right order, nothing stops you. There's so many good businesses. We spoke last year about, I think, Gravita as an example. It's something we own, so I'm not suggesting you should buy it, but it's got the whole ESG tag ready. They're recycling the worst product, buying the worst thing that people want to dispose of. There's unlimited runway for capacity growth. You can go across multiple products over there. So it may not be part of some big thematic scheme of these 5 big macro trends. But individual stocks, there are just so many in India, and the entrepreneurship is so alive and kicking. I mean, if I were 15 years younger, I would be out there like, visiting 500 companies.
We are 15 years younger, hopefully you can tell us.
So please go visit. No, the thing is, look, you make money with the conviction you have.
Okay.
And ability to sit on something. And Nimish Bhai famously said, activity and achievement are not related. So you don't need to keep going in and out of stocks.
Activity and achievement are not related. Wow.
So think of it. The wealth of, say, NM Group came out of sitting on Infosys for 15, 20, 30 years. The wealth of Rakesh ji came out of Titan, sitting over it for 15, 20 years. Even I would argue today, Warren Buffett, 50% is Apple.
What's the stock that you've been sitting on for last 20 years?
Nothing, sadly. Otherwise, I wouldn't be in the TV studio, right? You would be coming and interviewing me in my office. But think of it, say, even a simple stock like MRF, which Nimish Bhai had, it's 22, 23% compounding over 20 years. It's a, you would think it's like a boring business, but think of it, if India is going to go from 3 million cars to 20 million cars, from a million trucks to 3 million trucks, I don't care whether Tata wins or Mahindra wins or Hyundai wins or whoever wins. Tire wale to 3-4 hi hain. Same way in the ancillary space, we've loved this Motherson Sumi for years and years. I mean, as the cars get smarter and smarter and smarter, he builds the nervous systems of the cars. The mirrors are becoming cameras, they're becoming sensors. He's doing the cockpit for, he's kind of building the brain power of the car in a way to say. He's not got the software, otherwise he would be in another league.
Totally.
But if you put that together, there are just so many companies which, it's shortage of money actually.
I've been meaning to ask this question, that if you look at the general thumb rule for an investor, they'll say the following: buy a good business, which has good return ratios, buy at a reasonable price and hold it. But if I look at all the famous investors, Nimish Bhai's public portfolio, Radhakrishan ji's public portfolio, your public portfolio, even for that matter, Rakesh Junwala's public portfolio, the thought process is the same, but the investments are very different. Why is that?
The underlying theme is you want to take a asymmetrical bet. No one makes money by buying the, what they call in horse racing terms, if you know this horse is going to come first, so does the whole world. So the odds are not going to be there. You will make money if you buy horse number 5 who may come to number 4.
Yes.
And you're looking for, kissing the ugly frog which can become the princess or whatever the fairy tale was. The prince in this case.
Actually, yeah.
Well, we think of it the other way, right? So, sorry. But, and like our whole career was built on buying those mid caps which had characteristics to become a large cap. And if you see that character in the business and in the entrepreneur and the management team there, that's really your assessment. And you'll get a few right, you'll get a few wrong. Your batting average should be 65, 70%. If you don't get a few, which go wrong, that means you're not doing enough. And that's okay for, be doing closer to my age or older than me. But when the age which the country is at 27, 28, you have to be out there buying these mid caps, and you get 2 of them right, it defines your career.
So what is your son buying? That's a better question to ask.
Yeah,
he's the one who bought Gravitas.
Yeah. What is that one mid cap that you think has the potential to become a large cap? Not now, in the next 10 years.
We had bought IDFC for, in that context, that it's not the SBI, it's not the ICICI, which also we've done very well. But I think he has the characteristics to, build something of great value over there. It's played out very well, so I'm not suggesting, and I don't really want to suggest any stock for anyone. So
now, of course,
take that
disclosure,
as a standard thing.
Please do your due diligence. These are not recommendations. We are generally having a chat.
Thematically about India and where it's going, and there's just so much opportunity. And I have another slide which we're doing at Flame next week. We put up pictures of Warren Buffett, George Soros, Jim Simons, and others, and say each guy became rich by doing it differently. So you don't need a Xerox copy is never valuable.
There's no one
The
formula.
original is valuable. So do it whatever resonates with you, and you like that company. If there are 50 companies which will become, hundreds of billions, you need to be part of one of those stories. You don't need to be in all 5 of them. So don't have FOMO. Don't chase the market. The market is actually one standard deviation still above reality today. Because if I know India is doing well, so do a billion people.
Of course.
So you need to buy it when the mood is low. And at different points, the mood will get low. For some reason will come from abroad, something will happen with El Nino, something will happen with politics. You get a break and the entire market doesn't go. The sector or the stock you're concerned with, you just keep an eye on that. and you get it.
One follow-up question, purely related with years and years of market, what you've seen. You need to have an edge, whether it is information, whether it is behavior, whether it is intelligence. What to your mind should be an edge one should develop to be a good investor?
So, a great question, and we do this for my son as well as for the students. So the intelligence edge is gone because AI is smarter than you.
Of course.
The information edge, you better not be doing that because you'll get into trouble. It comes down to your temperament, that do you have the patience and the clarity of what you're sitting on. There's a difference in being stubborn and having conviction. That conviction comes from deep study and self-belief, not out of because I said it's right. And you have to be open to taking input from everyone and open-mindedness. And I therefore call this always that this profession is eventually it's a spiritual profession because you have to be aware of everything, and it makes you more and more introspect and get more and more humble because each time you make a mistake, it's a different one from the past. So it stops you thinking, I'm so great and I'm so smart. So you get whacked each time you think about that. And if you treat it as a vantage point from which you're able to observe the world and feel blessed and gratitude that you're thinking about the best things in the world, meeting the best people in the world, and you can actually sit back for days and not do anything except read and reflect. I find there's no better profession than this in the world. And that's why you can do it till you're what, 99 is Mr. Mangal?
Yeah.
And the brain stays sharp because you're learning all the time, right?
I mean, look at the terminology which he used this time to describe AI. Look at how he was able to predict the Bitcoin bubble just before the euphoria started. Yeah.
Absolutely. No, but I was just saying that, Manish has this amazing knack of identifying trends. Exactly a year back, he said his favorite movie is RRR. What is that now? In fact, we should, I think, go back to that picture.
Please don't show that poster ever again.
Yeah, I think we should go back to that poster. I mean, you're a trend spotter.
Never
Can we
again.
have that picture back?
Please.
Things don't change in life. Good things don't change in life. You have it there, you go.
There you go. Festivities on ET now continue, but thank you, Manish. Thank you for being part of all our celebrations.
And wish you all the best. You're doing a great service.
Thanks.
Thank you.
And as promised today, viewers, we have 14 stock picks lined up for you. And also, remember, it's our 14th birthday. We will bring on board our guests for today. We have Kunal Bothra as well as Avinash Gorakshekar joining us on the show. And not just Kunal, Avinash, we will also have picks coming in from Rajesh Agarwal, Shahina Mukaddam, as well as Ashish Kapoor, A.K. Prabhakar, as well as Hemen Kabatia. So you have a battery of guests, a battery of experts giving you top stock picks. But first, let me come to you, Avinash, and what's your top picks for our viewers? Given the fact that it is our 14th birthday, we've decided to give our viewers 14 stock ideas.
Yeah, I think good morning, Cheryl, and I think best wishes to ET now for the 14th year. Many more years of viewership since your channel is doing a great service for investors all across India. I have two picks today, Cheryl. The first pick is from the auto component sector. The company's name is Sterling Tools. This is the second largest fastener company in India. Has a very good marquee customer base like Mahindra, Ashok Leyland, Tata Motors, Daimler, and many more companies within the commercial vehicle, two-wheeler, and the farm equipment and the off-road space. They've done very well in the year FY23 with a revenue of almost 775 crores, EBITDA of 100 crores, and a bottom line of 50 crores. Our sense is that looking at the buoyancy in the commercial vehicle market and the passenger car market, FY24 also looks very strong. In fact, they have made a very strong inroad in the electric vehicle market also. So I would believe that over the next 8 to 12 months, one could expect a top line, a target price of at least 425, 450 a year. And the second company is a very interesting company. It's a turnaround company by the name of Imagica Entertainment World. They run one of the largest theme and water parks in Khopoli, which is near to Pune. And recently, the company has turned around significantly. They have done a top line of 250 crores and a EBITDA of almost 85 crores. Now, what is interesting about this company is that the company has executed a complete debt resolution plan. Debt has come down from 1400 crores to hardly 2 crores. In fact, yesterday, the company announced that unsustainable debt of 572 crores has been written off. So I think now going forward, there's going to be a lot of growth for this company. There's a lot of operating leverage available. So I would believe it is available at a very attractive risk reward price at around 40 to 46 rupees. our expectation is that the company should easily record an earnings growth of at least 15 to 20% consistently for the next 3 years. So we have a target price of 78 over the next, say, 12 to 15 months.
Okay, so those are the two recommendations coming in from Avinash Gorakshakar with the time and investment horizon of 12 to 15 months, and the two bets are Sterling and Wilson as well as Sterling Tools, I beg your pardon, as well as Imagica Entertainment. Sterling Tools for a target of 425 and Imagica Entertainment for a target of 78. But Kunal, coming to you, you have been an integral part of ET Now. Congratulations to you as well, because every day we get you in the studios. But for the times ahead, what are your top recommendations for all our viewers?
Thank you so much for that, Srishti, and once again wishing ET Now, all the staff members as well as all of you guys and the viewers a very happy 14th birthday, and wish to have a lot more birthdays going around. Now, for in terms of the picks, the two picks which I would want to highlight, and the time frame which I have for these picks depends on the kind of risk appetite for every trader. But then, two stocks which I would want to highlight. First is AB Capital. The stock looks extremely attractive on the short as well as on the medium term charts. Now trading at, I think, 175, 77 odd mark. Looks attractive for a target of 200. My belief is that the setup for AB Capital over the last 3 months, 6 months has been extremely positive and indicative that this could be a possible multi-year uptrend for AB Capital. So that's a buy. Short-term targets could be kept closer to 200, stop us at 165. And SBI, now we all know that most of the PSU banking stocks have actually underperformed in this leg of the market trend. But I believe SBI could be a top stock from current levels. Would suggest a contra buy, targets of 625, stop loss at 550.
All right, so those are the first two picks coming in from Kunal. We have two more picks that Kunal will give us very shortly. It's a buy on SBI, target of 625 rupees per share. Buy on AB Capital, target of 200 rupees per share. But as promised, let's actually hear out recommendations coming in from our fundamental experts as well as our technical experts who you see on our show quite often. So let's listen in from the bets, listen into the bets coming in from Shaina Mukadam, Rajesh Agarwal, Ashish Kapoor, AK Prabhakar as well as Hemen Kapadia.
Congratulations ET Now, phenomenal 14 years gone by. And I wish you the very best for the coming long term. In the medium to long term, I have two picks for your viewers. They are both small stocks, which I hope in a medium term will become medium to large cap stocks. The first one is BSE Limited. There I have a target of 650 for the medium term and a stop loss of 520. And the second one is Vadilal Industries. There I have a target of 3,250 for the medium term with a stop loss of 2,000. Now briefly to discuss them, BSE Limited, I mean, of course, everybody knows it. And today it's in the limelight because it sold 5% of equity of CDSL now for about 550 crores. That puts the value of investments close to about 1,500 crores. If you exclude that from the market cap of the company, the turnover to market cap currently is just 5 times, which shows you that there is value in investing at current levels for the medium to longer term. Second one is Vadilal. There it's a small cap stock, market cap lesser than 2,000 crores. They show strong growth. If you see the last quarter numbers, 20% growth across all parameters, revenue, EBITDA, profits, 20% plus growth. And for the full year, the profits were more than double. I think there, if you see the balance sheet, very strong balance sheet, their return ratios, ROC, return on equity, everything is above 20%, which shows that it's got a strong balance sheet, strong brand, and I hope that this will translate into better performance in terms of stock price. So I personally hold both these stocks from quite some time, and I believe that these are good investments for the medium to long term investor.
Wish ET Now a very happy 14. I remember doing trial shows some time back and just looks like yesterday, but still 14 years have passed. A very happy birthday to ET Now. And I would recommend two stocks on this occasion. One is Astral Poly. This is India's largest plastic pipe manufacturing company, and we have seen a sharp growth in their plastic and adhesive division. demand is coming back into the economy, real estate, and this is going to help this company giving back good numbers. Raw material prices have gone down, and there have been strong volume growth too. This is a cash-rich company, debt-free, with almost 500 crore cash in their kitty that helps into their inorganic growth. They have moved into storage tank also with a capex of 100 crores. So all in all, this company looks very good to encash the kind of real estate boom or infrastructure boom we are witnessing. And we expect a target of around 2,300 in the next 1 year. And the second one would be Graphite India. And this company can be a proxy for steel play in the country. Steel industry is showing signs of recovery. This company is 6 plants in India and 1 in Germany, with a capacity of 98,000 tons per annum of electrode. There are 2 positive points going for this company. One, the raw material prices have gone down. This company uses needle coke as its raw material, and with crude prices going down to 72 odd levels, I think needle coke prices are going to help this company report better numbers. And the second one is with decarbonization. Most of the steel industry is trying to move to electric arc furnace, so that again would spur the demand. The numbers have been bad in the recent past, but going forward, we believe that the numbers are going to recover. Hence, we recommend this as a buy for the next 1 year.
I would like to wish ET Now a very happy birthday. It has been a great 14 years. And on this occasion, I think one can look at market for fresh ideas. My 2 stock ideas for investors are from the large cap space. I think large cap space itself is giving great opportunities. One idea is the bellwether Reliance Industries. I think Reliance Industries at the present juncture presents a very good risk-reward paradigm. The stock, after a huge re-rating in 2020, has been in a sideways range over the last 3 years. It has many verticals now. It is a very well diversified company and presents multi-fold opportunities in the digital space, in the retail space, telecom, as well as oil and gas industry. So I think altogether the platforms have huge value embedded in them, and one can expect this value to get realized over the next few years. So Reliance from here presents a very good, safe and steady money-making opportunity going forward. The second large cap idea, again from the large cap space, HDFC Bank. Again, this stock has been kind of underperforming, which is very unusual for HDFC Bank to underperform, but it has been underperforming the market over the last few years. The stock is relatively cheaper price right now, cheaper valuation in terms of what it historically has commanded. The reason has been some sort of concern over the pending merger with HDFC. The merger process is nearly complete, and one can expect the stock to come back and start performing in line with the market, and in fact outperforming going forward from here.
2 stocks we like. One is Rolex Ring. Rolex Ring operates in 2 segments. One is bearing rings, which forms almost 52% of their revenue. The other one is automotive components, which forms 48% of their revenue. And companies, most of their revenue comes from export. 60% is export and 40% is domestic. And most of the bearing makers source it from Rolex Ring. So there are multiple opportunities here. As economy is picking up, we feel the opportunity is immense. And very important is their product quality is also very good. And their EBITDA margin is slightly above 20%, and management has guided that it will scale up in next few years also. China Plus One is a huge opportunity for this company, as many OEMs are trying to resource from India. So Rolex Rings has a very big opportunity. So I think if somebody is looking for 1 to 2 years, Rolex Ring will be something which will give a very good return. The second stock is Polte Patel. It is a real estate company which operates in 3 markets. One is Pune, which is a major market for them. Next is Mumbai, which is the second largest market, and Bangalore. They have a debt of 112 crores. In real estate, having a low debt is very important. They are operating on asset-light model. And in Mumbai, most of their projects are redevelopment. Recently also, they got 2 redevelopment projects in Mumbai. And their sales value has almost doubled compared to last 2 years. So they did a sales value of 2,232 crores. So, and the business development which they are doing, they say almost 12,000 crores would happen in the next few months. So already they have a huge potential. I think real estate companies are likely to do well as our economy picks up. In that, being this Kolte Patel being a very small company with 2,500 market cap and manageable debt, and their life republic is one thing which is a cash cow for them. I think this also offers a very big upside in the next 1 to 2 years.
I have 2 stock recommendations. The first one is a buy call on REC. REC have been consolidating for 12 years now. It is on the verge of a major breakout above 155. We are currently 151. So one can buy REC at around 150 with a stop loss of 125 and a target of 200. This is a 6-month call, a slightly longer term point of view. The second stock is on which I have a recommendation is PVR Inox. Deeply oversold, positive divergences, crossover buys, medium term bottom in place. So one can buy PVR Inox at around 1490 with a stop loss of 1450 and a target of 1590 from a positional point of view for a period of 6 to 8 weeks.
14 stock picks that we've got from our experts for you today. We have Rajesh, who likes Astral, Graphite India. Ashish Kapoor likes RIL as well as HDFC Bank. AK Prabhakar is Rolex Rings, Kolte Patil. Heyman likes REC, PVR Inox. Shahina Mukadam is BSC and Vadilal Industries. And Avinash likes Sterling Tools, Magica Entertainment. And we know that Kunal likes SBI as well as AB Capital. But yes, as promised, we have bonus 2 more stock picks. So that means 16 stock picks for you. And Kunal, which are the other 2 stock picks?
So 2 buy calls, both from the private sector banking names of different market size. The first one is about IDFC First Bank, looks extremely attractive for a target of 88. Would recommend a buy with a stop loss of 76. And HDFC Bank is a very strong contra buy at current levels of 1600 approximately, targets of 1720. So expecting a new high on HDFC Bank, stop loss at 1544.
All right, so those are the top picks coming in from Kunal as well and from Avinash as well. Thank you so much, Kunal, Avinash, for joining us on the show. And viewers, with that, it's a wrap on this edition or the special edition of Buy Now, Sell Now. It's a goodbye from Srishti, myself, producer Abhishek, as well as our director Santosh. Thank you so much for watching. See you next week.